Oh man, so Bitcoin fell to as low as 43,200 after the CPI reading came in at 7.5%. Yes, that is higher than the 7.2% expected year-on-year inflation number. Now, you guys will know that we've been covering this in the lead up to the CPI reading, and you already know that my view on it was that if inflation comes in higher than expected, we will see Bitcoin initially take a small fall to the downside. Why? Because Bitcoin is seen as a risk on asset, okay? Now, let's go straight into the charts, because in this video, we're going to take a look at the charts. We're going to look at what's happening with Bitcoin right now. As you can see on the charts, it's starting to recover. And then I'm going to give you my view on where I think it's going to go from here. And more importantly, what is my view on whether it's an inflation hedge, whether it's a risk on asset, and the rest of it, because it's got a bit of nuance to it. So let's take some time breaking that down. Now, as always, guys, if you want to support this channel, don't forget to smash up the like button and subscribe. Thank you guys so much for supporting this channel to this date. We've managed to hit a milestone of 6,000 subscribers, but the next major milestone is obviously to get to 10k subscribers and then 50. So guys, we're just starting out here. Thank you for joining the journey so early. Make sure you're smashing the like button and subscribing. Each like and each comment at this level for a small channel really does make a difference. So thank you very much in advance for helping me out. Now, what are we seeing? Let's walk through what just happened over the last few hours. So the inflation reading came out at this point here. At that point, we're at 44,961, knocking on the door of 50. We had just ticked over 50 in the few candlesticks before. Now, that came at a W pattern, okay? So if I zoom out before, and I want to touch upon this because this is quite crazy in itself. Let's just get zoomed in here on the 4-hourly. In fact, it's easier on the hourly. There we go. So as you can see on this hourly pattern, we were forming a W pattern, right? So you can see here using this neckline from where we got rejected initially, you were creating a W pattern with neckline at 45. Now, as soon as the CPI reading came out, tanked straight down to the downside, all the way as low as 43,600 here on these candles. But if we go into the minute candles, which is where we just were, you will see that we fell as low as 43,200. We then managed to pick back up, created a higher low here at 43.5, and then we ran all the way back up to 45,357, and we're just calling off now. If I bring out the EMA ribbon, which you can use here on the daily, you can see we're just coming to collect some support here from the daily, and maybe we can then bounce back up to test this important line at 45,504. Okay, that's an important line from the other time frames, which I'm going to come on to now. But let's zoom back out again. Let's just understand what is going on here in the markets. Why did Bitcoin, if it's seen as an inflation hedge, and everybody would tell somebody this, right? We've got new investors and traders born every single day who are watching these videos. If somebody tells you Bitcoin is the ultimate hedge against inflation, right? Gold 2.0, whatever they call it. Why then, if inflation comes in very high at 7.5, is Bitcoin's reaction to fall to the downside? Let's understand this. Why does this happen? And more importantly, how did I know that was going to happen initially? Well, we need to understand there's two types of investors. Well, there's more, but for this purpose, there's two types of investors. You'll have your core investors who are long-term holders of Bitcoin. I consider myself in that category. I believe long run, Bitcoin is a hedge against inflation. It's a hedge against the Fed's mismanaged printing of money over the last few decades, and it will be the antidote to fiat currency. That's the thesis we choose to believe in when you invest long-term in Bitcoin. But not everybody thinks that way, or they can think that way, but then you get your other kind, which are the short-term thinkers, the ones who are going, hang on a second, I'm into Bitcoin now for the next few weeks, or few months, or 6 months, quarters, however they want to think about it, but I'm treating it as a risk on asset. I want high risk, high reward. And therefore, they invest in crypto, specifically Bitcoin and altcoins. Really important that we understand that, because of all the people who are holding Bitcoin right now, you have your core holders, your long-term holders. That's why it's important to look at on-chain metrics, to look at who are the long-term holders who take their supply off. And then you have those who are just holding Bitcoin in the short term. They often leave their coins on the exchanges because they're trading, right? When the market's going good, they buy some Bitcoin. When the market's going bad, like inflation's looking bad, they sell Bitcoin, okay? This is why you get these contradicting messages in crypto. And hopefully that clarifies some of that, because the initial fall down, let's just go back here into the charts. The initial fall down when CPI comes in hard is the people who have a short-term mentality, right? They're looking at the market and they're saying, risk is going to be off now. Everything's going to get wiped out. I need to quickly sell my Bitcoin, right? Because it's risk off right now. And then that's why you get this dump to the downside. But why are we getting this pickup? Why is the dip being bought here? And the reason for that is longer term, institutions and people, sophisticated retail investors, are net buyers of Bitcoin right now because they're realizing, hang on, inflation is here to stay. What is the ultimate long-term, not short-term, hedge against inflation? That's Bitcoin. When yield can't be achieved anywhere else, when bonds are, the yields are spiked on bonds. Let's take a look. I think we crossed $2 at one point today. Yep. When yields are peak high 1992, okay, here on bond yields. These are high levels, guys. We've not seen these for quite a while. Let's go to the 2-year chart. Yep, higher than there. Let's go to 3-year chart. There we go. So you've not seen levels since roughly, if I'm not mistaken. Yep, there, 2019, September 19, guys, okay? So that gives you an idea of where we're at right now because inflation affects bonds. So where are they going to go to for yields? They can't go to high growth stocks because they're getting smashed. High growth stocks rely on low interest rates to grow because they need capital, right? This is why people then hedge to flock over to Bitcoin as a long-term hold as a hedge against inflation. So just to demyth that, guys, first and foremost, you're getting a whole bunch of people arguing, saying, yes, it is a hedge against inflation. No, it isn't. The answer is both. In the short term, it's not a hedge against inflation. We've seen it's been tracking NASDAQ to the T. If you pull up the NASDAQ chart right now and you compare it to Bitcoin, they took the same fall. Okay, let's go into the hourly chart here. Let's remove the EMA ribbon. And you can see here, we had a really bad hour here falling down. Okay, now let's go see if we can get our NASDAQ, which is the QQQ. And you'll see the exact same thing. Right? Exact same fall and then the dip being bought, but not as much as the dip being bought on Bitcoin because Bitcoin ultimately is seen as the long-term hedge against inflation. Let's also look at the fear and greed index. Let's get Bitcoin charts back up there and let's head back into the fear and greed index. What are we sitting at here? Well, we're seeing 50. Right? That is still neutral. We're still there. We're not fearful as where we were a couple of weeks ago when we sat at 32. The market is still confident. The market understands we're in a reversal pattern here. We kind of priced this all in anyway. We knew inflation was going to come in high. It didn't come in ludicrously high. It wasn't 8% plus. It is high. Nobody's saying it's not high. But the market knew that. The consensus was 7.2. It came at 7.5. Yeah, we may get a double interest rate hike in March. So that becomes our next catalyst. And that is why I said we're going to get a lot of volatility between now and March the 16th when Jerome Powell comes out from the Fed meeting and announces his policy. I am starting to get the sense that the market has priced in 2 interest rate hikes, but that's something we're going to have to monitor between now and March the 16th, okay? But either way, growth is good. The economy is good. Earnings are good. Companies are doing good. And also crypto is ultimately the long-term hedge answer against all of this. All of this exacerbating inflation is due to the inappropriate amount of printing that went on. You can't print that much money, give that much stimulus, give that much aid and lock up the economy and not expect to have some repercussions. And that's what we're seeing now. So anybody who's acting surprised is almost foolish, right? This was known. Right, so that's that out of the way. We can park that. Now the next point I wanted to come across, or cover off, is some of these pump YouTubers, guys. And I'm sure some of you have seen this. In the lead up, literally, I'm not going to name any names, but literally in the lead up to the CPI reading, there were chartists who were big follower, big YouTube channels out there who were plotting patterns, who were telling you to take trades and giving you the link to the description to take out a leverage trade on a W pattern or a triangle pattern. The same patterns which we're seeing here, guys. They're obvious patterns, right? For anybody who does TA, these are obvious patterns. But to say they're placing these, really 7-figure trades here on a W pattern leading into an inflation reading is just exactly one of the reasons why I started this channel. Because when I started this channel, I realized there's a lot of TA guys out there posting their charts, but they're never blending the fundamentals. They're never blending the macroeconomics. They're not looking at the bigger picture, and they're sending new traders, new investors down a pit just where they're going to lose money, right? And that is crazy. There's no way you can be trading a pattern here on Bitcoin oblivious to the fact that CPI reading was coming out, and anybody who placed that trade would have got stopped out and liquidated, right? Simple W pattern, but leading into a CPI reading exactly at the apex of a W. And you're suggesting everybody take that position out on leverage. Crazy times, guys. Be careful who you're taking advice on. Never take a trade based on any YouTube, definitely not me, and definitely not any of these bigger ones that you see promoted on your YouTube feed, okay? Be very careful with that. Now, where's the further evidence that institutions are buying? Well, you remember that I showed you this and I said, well done, Bank of America. They said Bitcoin trades more as a risk asset, less than inflation hedge. Congratulations. I mean, you're super late, but we spoke about that for many months here on this channel. We knew that. We saw it correlating with the NASDAQ. We understand that when risk is off, Bitcoin sells off just like growth stocks, and the Nasdaq does as well. Okay, but longer term, it is a hedge against inflation if your investment horizon is long enough. Now, what else do we see? Well, we saw this. We know that there's some, positive news coming in the market. 200,000 in the first half of 2022. When you see articles like this, that's when you know fear is starting to dissipate. That's when you know money's going to start flowing in that was sitting on the sidelines. And where's the evidence of that? Well, let's check this out. Crypto market remains flat as Bitcoin sees institutional buying. We know that institutions are buying. The institutions with long run positions to build out, they're buying now. They wouldn't buy in 30 range because they don't want to take that risk for their clients. As soon as we get through 40, I told you there was loads of money waiting on the sidelines that's going to pile in. And they're going to pile in. And the way you can see it, you can tell when American institutions are buying because they either do so early in the morning on American trading time or very last thing at the end of the day. You'll see these massive candles of green. Okay, so watch out for that. Go look at your Bitcoin chart, American open times where the stock market opens and closes in the evening, and look at the Bitcoin chart, and you'll see that rising up. So this is just further evidence that institutions are really looking for yield, right? That's their job. They have to give their clients return. And right now, when the market's really struggling, their clients will be ringing them saying, you're not doing anything. Get me some crypto. Get me this. Get me that. And they've got to search for that yield. The bond market is not delivering it right now, right? The bond market. Then you've got your growth stocks. Okay, so where are you going to go to for these yields? That's when they come to Bitcoin, the ultimate inflation hedge over the long run. Okay, so that's what we got there. We also know that RSI here on Bitcoin, if we go to the daily, we're still at 61 down here, guys. We're still in the 60s down here. Okay, so the RSI reading still has plenty of room to get back to 80 before it's overbought. So we've got plenty of room to move to the upside. And that brings me on to my daily chart here, because on the daily chart, you can see we've had some really good strength here, guys. Even today, we're still green candle sticking right now, which shows that the dip has been well and truly bought. The methodology is that longer term, Bitcoin is obviously the inflation against inflation, and that's why we're seeing money pour in. And this is a big move to the upside now. Ever since we broke out of this resistance, it's a nice, clean move to the upside. Yes, we've had big topping tails and bottoming tails here on our candlesticks, which suggest a lot of bulls and bears fighting. That's normal, guys. We're going to have a lot of fighting points here, like we've seen around key resistance levels. Think about a war. It's a war of attrition, and there's key bunkers where the bulls and the bears need to fight it out. But once you win a couple of those, the bears become very demoralized. They become weaker, and then the subsequent moves become far easier to make back up to some of the levels we need to get back to. Okay, so really important that we can stay above 45, and our next important, because 45 then beats this top and it beats this top here. The next important level is this level of 47. You can see how much activity we had from this period here and this period here around the 47 mark. This won't be easy to break through, but we need to get past that and break through that level and start working up the scaffolding back through the levels. Okay, so we've got a bunch of different levels. We'll cover them off in the videos together here daily, and then we need to work back towards our high here of 56 to get into this green box, which we've covered, and we know that's an important level, which no doubt we'll cover as and when we get there. What's our risk to the downside? As always, we need to monitor our risk to the downside, and I may be a pessimist, I may be kind of not joining in the narrative of being excited for this bull run, but it's my job to position you guys ready for whatever happens to the downside. And what can happen here to the downside is we can retrace. Of course we can. Okay, so if we just take a move, let's see if you can even, I just eyeball it, but you can use a Fibonacci move as well. There's no reason why not. From the bottom to the top, where we're there roughly, that's your move. Okay, so even if we retrace down into the golden pocket, you can retrace down to 40,500, call it 40,000, between 40 and a half and 41 here in the golden pocket. A bit more of a retracement down to 50% would take you to your 39,000 level. Okay, so those are the areas I'm looking at for a retracement to the downside. And those retracements don't scare me. Coming down to 40, coming down to 39 do not scare me at this point, because what do you get? All you get is if you bounce from those levels, you then just get a rotation, you've created a higher low, you go post a higher high, and you continue your trend to the upside. And that's what's important here. So don't be fearful of a pullback. In fact, these pullbacks are when you want to be buying. I would refrain from buying here on a steep, almost parabolic bounce out from here. You had the opportunity to pick up here. You had plenty of opportunity to accumulate here. Let it do its thing. Let it pull back. And that's when you want to look to be accumulating. Same for your altcoins. Don't be chasing anything into position, into strength. Let it have its moment. Let it run. It's green candle sticking right now. If you manage to pick up the intraday dip, fantastic, right? Then you would have got a little bit of a nibble at about 43,200. That's good, right? Because we're getting big topping tails. And you can see right now, literally as we're recording here, Bitcoin is going 45,206. Nice. So it's going back for its back for a new high here, which was 45,352. So we need to get back up to here and then head towards 45.5, which is the level where we got rejected from. Let me show you that on the 5-minute chart, which is that level we got rejected from here. Okay, so we need to get back to that 45.5 level. Now, let's take a zoom out and look at the weekly chart just for completeness, guys. I know it's really important that we always look to all the timeframes for confluence. And you can see this is such a beautiful chart pattern, guys. You saw we covered this for a long time. You said we were big triangle. We called the breakout. We got the breakout. We got the new high. As it was tracing down, I said maybe this could just be a test of the top of the wedge. That's exactly what we've seem to have gotten, guys. Now, this doesn't mean that this has to go all green now. That's the foolish thing. Okay, even if you have a couple of good weeks and a bad week, and then we move like this, that's good. As long as we're posting continual highs, that is what's important here, okay? As long as we keep higher lows and higher highs and we continue to trend in the right direction, we'll be good. We'll recover the price here on Bitcoin, okay? So there you have it, guys. That's my view on what's going on here in the market for Bitcoin. Overall, it's a bit of a nothing burger, the CPI reading, right? There's nothing to be worried about. And you can see that the Bitcoin price is reflecting that right now. Yes, there's going to be volatility between now and March 16th. Does that matter if you're a long-term investor? No, because the narrative hasn't changed. There's still more money printing than ever before. There's still high inflation. And therefore, as a long-term hedge, Bitcoin is there. In the interim, there will be moments of risk off. And when it's moments of risk off, don't be surprised to see if Bitcoin retraces. That should give you an opportunity to accumulate on those pullbacks. And that's the aim of the game here. As always, guys, if you appreciate this type of content, don't forget to smash up the like button and subscribe. If you want to support NordVPN, check the link in the description. Coupon code is 70% off 2-year plans on a VPN, guys. Get yourself set up on a VPN. I think it's like $2-3 a month. You have complete anonymity when you're trading, when you're logging into your exchanges, when you're messing around with your wallets or the metaverse or NFTs. Make sure you've got that set up, guys. Also, if you want to watch movies from a different country or play games with friends from a different country, you can go and set that all up through your VPN. Check out the link below for NordVPN. As always, thanks for watching, guys. We'll see you in the next one.